Hello, Fiona. Can you hear me?
Yes, I can.
Oh, hi. Welcome to this chat.
Thank
Thank you for
you.
accepting the invitation.
Thank you so much for having me.
Yep. I've been following for some time, and you're definitely one of the high-quality accounts in the finance space. So I'm glad that we have you here tonight with us.
Thank you.
So thank you everyone for joining, and maybe we can start. Like for those that do not know you, and I think there are not so many right now that do not know you. But if you can give like a brief overview of your brand and what your account is about.
Absolutely. So, first of all, I just want to say thank you to everyone for joining us on this podcast. And obviously, thank you, Costas, for having me on here. It's definitely a pleasure. So, for those of you who are not familiar with me, my name is Fiona. I'm also known as the Millennial Money Woman. And you guys might have seen my threads and my tweets on Twitter. But not only that, I also run a blog. And that's honestly, my main passion. I really enjoy running this personal finance blog. It's called the Millennial Money Woman. And ultimately, the goal is, really to teach millennials, young professionals, and the like, basic concepts about personal finance. And that's ultimately my passion, right? Like personal finance and just trying to debunk some of the really complex topics that I know finance is basically all about. When I started in finance, it was like a second language. So it's definitely not easy to comprehend. And that's the ultimate goal of the website.
Yeah, that's a great passion to have, I think, because we lack financial education and financial literacy. Did you have like anyone that kind of mentored you or pushed you towards financial literacy? Because like we are not taught these topics in school, so you either have to learn it by making mistakes, or you need to have someone teach you these topics.
Absolutely, yes. And that's actually a very good point. So, yes, to answer your question, I did have a mentor and I was very fortunate. So, I met my mentor probably in my mid to late teens. And he was a successful or is a successful businessman now in his late 70s or even early 80s. So, very well accomplished. And I was able to learn a little bit about him and how he was able to progress in life financially and professionally speaking. And I think just kind of getting a taste of what life can look like, right? Like how life can truly unfold for you if you take your own life in your own hands, the reins in your hands, and kind of take control and move ahead. And that's kind of what ultimately inspired me. But I think it goes back even a little bit further to when I was 10 years old, roughly. So I had my grandparents were my ultimate inspiration when it came to personal finance. My grandparents, they built a small, nothing fancy, family business. They worked every single day of their lives. And unfortunately, they had very poor financial planning. And due to this poor financial planning, one day they lost absolutely everything and more. And they were probably in their 70s. And I saw them go through that. And obviously at that time I was very young, so I didn't exactly comprehend what was going on, but it did leave a very lasting impression. I saw them lose every cent they worked for. And I knew that that's something I did not want to go through in my future or help people as much as I can not go through that in their future. And I think that was kind of the seed that started my passion to helping others succeed in personal finance. And then that passion kind of grew right into college years and starting this blog. But that I think was the genesis of it all.
Yeah, I think like I've seen it also in from my personal experience. Like many people, they may have like a great talent, because I've seen like people who are like excellent chefs and they open their own restaurant, or they were very talented athletes, or they were like very creative, but the lack of financial education sometimes leads them in like bankruptcy and shutting down their businesses, or their, going into debt. So I think that's the cornerstone of success. Like I think if you're not financially literate, you cannot succeed, because even if you earn a lot of money, you will spend it either way at some point, and you will be in the red again. Like we've seen it with like many all-star athletes, NFL, NBA, or lottery winners. Like if you don't have financial education, I think that's gonna lead you down a bad path. So I think you started your account like approximately 1.5 years ago. Is that correct?
So yeah, my account started in May of 2020. So I just crossed the 1 year mark, which was a pretty cool milestone.
Yeah, congratulations for that. I think that's an important one because, like
Thank
most
you.
people, I think they give up after 3 to 6 months. So once you cross that 1 year mark, I think you're in a good path.
Definitely. It's all about consistency, but I'm not going to lie. I was definitely a couple of times I was thinking of quitting. There was one point in my Twitter life and in my blog life, I was going negative actually. Like I felt like I reached a plateau, and instead of gaining a couple of followers every day, I actually started losing like 10 followers every day. I'm like, "Oh my gosh, this is so bad." But I was able to turn it around. Lots of hard work, definitely, but was able to turn it around. And now I am where I am today, but it's definitely not easy. Let's put it that way. And it certainly takes commitment and discipline.
Yeah, I can attest to that because for me it's been like 6 months since I've less than 6 months since I've been writing actively, and there are like ups and downs, and sometimes you want to quit, and sometimes you say I'm gonna keep going. So you just have to go through those bad times. Did you do like anything specific in terms of like when you reached that plateau and you were losing followers? Did you change like maybe your content or your brand, or what were your moves to kind of get out of that?
Yeah, definitely. It's a great question. So, honestly, what I did was I'm not sure if you guys are familiar. AOP, he is an account on Twitter as well. He created a guide. I think it's called Create 24/7. And at that point, this was probably October, November of last year in 2020. I ended up downloading the guide and followed. Like I probably read it 5 times back and front, and followed the steps of that guide, and it ultimately helped me improve my Twitter game. I mean, there were several things I was doing wrong, and kind of like beginner mistakes. Maybe not posting consistently enough, not adding true value, right? Like now I try to add value through threads. You guys might know me because I post a lot of threads throughout the week, and that has kind of become my niche. But yeah, so that was the ultimate thing that I started to change.
Yes, I will agree on threads because I think, after some point, like especially on finance space on Twitter, if you like all the single tweets that I see are like more or less the same, repurposing content, the same and the same. But if you like focus on threads, because that's what I also did at some point, like I was posting like threads like almost every day or once every 2 days. It's like easier to increase your engagement and provide value to people, and people will be more eager to share your content and retweet with others if they find value. I think it's more difficult to provide value with a single tweet, like 280 characters.
That's right.
Yeah. So going back to the finance, you mentioned that you had a mentor. So I am assuming you didn't make any of the classic mistakes of millennials or younger people that buying a brand new car once they graduate from college, or going into debt, or loading up on credit card debt. Uh,
Yeah, I was very fortunate that that did not happen. But I was able to also help other millennials to kind of avoid that. I knew I was in a better situation than most, so I wanted to pass that on. Not just with my blog, The Millennial Money Woman, but also years ago when I was still in college, and even years after college, I was trying to create these. I created a little nonprofit organization that specifically tries to help teach high school students and underprivileged young girls and boys about financial literacy. And like you said, it's so difficult to truly understand about personal finance win, right? If you don't know enough about financial literacy, it's very difficult to build wealth. And some families, they might not have the resources or the money to expose their children to those topics because maybe it's taught in a different school or they can't afford books. And so, I've met a lot of children that their parents can't afford alarm clocks to get them to school on time. I mean, it's very unfortunate. And so my goal is to obviously give back. And those are some of the kids and high school students too that I try to help and at least try to steer in the right direction. So like you said, avoid credit card debt, maybe try to cut down on the amount of spending in college and instead try to get a part-time job, learn about the basics of investing, etc.
Yeah, that's a great purpose that you created, like this non-profit. I think it's very important to help. Like I'm trying to like tell it to my friends, but sometimes they don't even realize uh, because for me it seems like kind of once you know these basic financial principles, they seem very easy to understand. For
Yes.
example, compound interest, or that if you invest in an index fund, let's say 300, $400 every month, you will be a millionaire guaranteed. Like once you know these things, they seem kind of basic, but when you try to tell it to others, they don't seem to understand the importance of it.
That's
So
right. I
how
think
have you managed to overcome this?
absolutely. It's I think a lot of people, like you said, I think they go into the conversations with finance already thinking it's way too complicated for them to understand. And it might be the media or it might be movies that we see and we think it's super complex, but like you said, it's actually not that complex. Finance, if you break it down, um, you know, it's actually fairly simple, like building wealth. The true formula really is spend less than you earn. What do you do with the money that you don't spend? You invest it. You're smart with your income. Don't fall victim to lifestyle creep, which essentially means as your income rises, you buy more expensive products like newer cars, etc. So yes, absolutely, it's very simple in general terms, but I think a lot of people try to resist that and don't want us to break it down that way. But once we do break through that barrier together, and kind of speak in their language, trying to explain basic financial principles in the everyday person's language, it opens their eyes. I mean, literally their entire world can change, their entire financial future by understanding basic personal finance. So, and that's the true beauty of it.
Yes, and I mean, not even basic finance, like even having a simple budget. Like maybe our grandparents even did it, like, with pen and paper, writing down how much they spent and how much they earn. Like from my friends, I'm the only one that has like a budget of how much I spent each month and how much is left and how much I invest. And when I mention it, they're kind of, uh, they cannot believe, like it seems to them something out of this world, that having a budget, for example, which is like so simple. Like I mean, you don't have to do anything, just use your credit card statement or your, I don't know, like write in Excel spreadsheet or in a notebook. I mean, it's not that difficult. But even that basic thing, I think like people view it so, I think because nobody told them.
That's right.
I mean, I think that's the most important, because like all these things are not so complicated. Maybe, as you said, maybe from the movies or the media, they try to make it like that it's very complicated, and maybe like some money managers want to make it sound like complicated so they can tell you, give me your money so I can manage it for you and charge you 1-2% every year, which might seem small, but if you do the calculations in 20-30 years, they will take half your earnings.
Mm-hmm.
So I think, yeah, that's the most important. Start with the basics, basically, like budgeting. I mean, it doesn't take any knowledge to do that. As long as you can do addition and subtraction, you can do it. It doesn't take much. And,
That's
and
ex-
as, yeah, yeah. Sorry, yes. What do you say?
Yeah, no, I was just gonna let you know that I think you're exactly right. Like with budgeting, it is very simple, right? And I mean, there are always budgeting rules of thumb out there. There are free budgeting apps out there that you can use as well. Some of those include, I think Mint is entirely free. You can even track, all of your expenses and then export that into an Excel spreadsheet. To even better track that, you can just use a plain old Excel spreadsheet if you're that type of person. And then there are other really neat budgeting apps too that can help keep people in line. Some of them cost a little bit of money. I know You Need a Budget. That is a good budgeting app. I know a lot of friends of mine, they've used this budgeting app and they've said it works wonders, but it does cost money. But yeah, there's so many resources out there, and it really just takes like an hour every week probably to really sit down, look through your financial picture. How much are you spending? Like you said, right? Take a look at your credit card statements, your bank statements, that type of stuff. Look at your income. What are you earning? And then kind of figure out where you are and what your goals are. It's not really that complicated, and you really only need an hour, not 10, 20 hours every month to review that type of stuff.
Yeah, not even an hour. I think, like, for example, for me, like, I just do it like, every 2 or 3 days. Like, I mean, it's not that make so many purchases every day. It's like groceries. Maybe you go out and eat or order takeout or, buy something online, but it's not every day. So I think it doesn't even take that much time to do basic budgeting. And when it comes to investing, again, it's the same thing. You can invest in an index fund with automatic deposits every month, and it's, I don't know, how much does it take? 5 minutes, 10 minutes. So with 20 minutes per month, you can have your entire budgeting and investing like automatically. But I think many people are not aware even of these basic things. And when it comes to investing, what's your philosophy?
Yeah, good question. So I know a lot of people, they enjoy what's called day trading, right? So like basically looking at your accounts on a daily basis, even hourly basis for at least some of my friends. And they enjoy, buying, selling, that type of stuff. So that's not who I am. I personally am a passive investor. So what that means is I am someone who follows what is known as a dollar cost averaging strategy. DCA, that's what it's known as for short. And a dollar cost averaging strategy basically is when you take like $100, let's say, every single week, and you put that in the stock market into a specific stock or a mutual fund, for example, and you buy that same mutual fund for $100 every week for like 30 years or whatever it is. It's automated basically. And I like that strategy, dollar cost averaging strategy, because it takes your emotion out of the picture. And what I found, at least for me personally, when I try to make investing decisions myself and I try to figure out, like, oh, is this a good time to invest or is this a bad time to invest? I don't often think rationally, right? I mean, I am trained. I have had plenty of experience in the investing world, but my emotions still take over. And that's really because it's my own hard earned money and I want to make the best decision possible. But sometimes that doesn't happen. No one has a crystal ball when it comes to investing. No one can predict what will happen tomorrow in the markets. So that's why I decided the DCA, the dollar cost averaging strategy, is the best strategy for me. It's automatic, it's out of sight, out of mind, and I don't have to think twice about it. And in 5 months from now, when I open my investment accounts to see how I'm doing, chances are it will be doing very well. Now, if the stock markets are volatile, and I know that there's a market crash like in March of 2020, where the stock markets went down, I continued my dollar cost averaging strategy, but I accelerated it. So what that means is instead of just putting $100 into the stock market, I actually put in like 500 or 1,000, right? Depending on how much cash you have available. So that's kind of what I've been doing, but essentially automatic, invest in one mutual fund, and look for the long term. So nothing very sexy, nothing super complex.
It doesn't have to be sexy as long as it's like very simple. And I mean, it's what you mentioned, the DCA strategy. It's been proven that it's the best strategy to follow, because trying to time the market and selling and trying to predict when it's going to crash, and then you're going to go all in when it's crashing, and then This strategy has been proven time and time again that it does not work in the long term. You may be able to time the market once, maybe twice if you are lucky, but you won't be able to do that consistently. And personally, I follow the same approach. Like every month, I invest the same amount, I divide it in the same stocks, and I don't care. Like I don't pay too much attention to the daily news and the daily movements. I think that's the best way to, because if you watch the news every day, they try to create fear, and because they want you to trade more because they make more money when you trade. So as long as you are passively investing every month the same amount, or even when you get a raise, you invest more, I think that's the best strategy, and it's been proven to work wonders.
Absolutely, and I think you make a really good point, Costas. Is the fact that there are a lot of trading fees associated with every single buy or sell you make, and especially with active managers. So if you invest in an active mutual fund or even in a hedge fund, for example, yes, they can make you a lot of money, but they do charge a lot of money too to do that. So I think the
Well, I will
role
disagree with that they are making you a lot of money, because 90% of them, they can't even beat the S&P 500 index, and they charge you more to perform less. So
That's so I think, yeah, in the long term, you're right, definitely. They do not outperform the S&P 500 in the short term, so we're talking like a year or so. It could
yeah,
be that
maybe,
they
yeah,
right,
but they
right,
won't
but
do it consistently. It won't be the same people beating the market every year.
that's right. And that's why I'm a passive manager or passive manager. That's why I'm a passive investor myself, because I am looking into, 4 decades from now, not 2 years from now. And that's why the fees that a lot of these hedge funds charge, which is typically like 20% of the profit plus a 2% yearly charge for whatever,
Yes.
whether they make you, a gain or a loss. That's a lot of money that they charge you. So, versus passive investing, if you go into a regular, a low cost index fund, that will probably charge you like 10 basis points, which is 0.10 or even less, which is very inexpensive.
Yes, exactly. And because, like as you mentioned, this 2% might seem like very small. What's 2%? But if you do the math, and as you know, returns compound, but also the fees compound every year. So if they charge you 2% of your assets under management every year, like in 20, 30 years, they've wiped out more than half of your earnings. So you're taking all the risk because you are investing your money, and then you split the profits 50-50. I mean, that's the worst scenario like to be in. And that's why I prefer like to do it myself also. Because you can use index funds, and also like if you don't want index funds, you can use ETFs, you can use like a diversified portfolio of stocks or bonds, although they're not very popular right now. But yeah, I agree that doing it by yourself, it's definitely better in the long term, especially if you don't need the money right now. Because you mentioned, for example, the crash in 2020, like many people panicked that, but if you don't need the money like in the next 6 or 12 months, first of all, you shouldn't have it in the stock market. And second, if you don't need it in the short term, there is no point of selling and then buying again. And because you also pay taxes, you pay fees, and then you think you're earning more, but in the end, if you do the calculations, you will see that the best course is just to stay invested all the time and keep adding every month, as you mentioned, with the dollar cost average.
Ex-
So yeah, now just trying to like shift to earning more, because like always we mention how to save from budgeting and how to invest, but I've seen like on Money Twitter they don't mention how to earn more from your day job. So I'm not sure like at what stage of your career you are in. Like, are you like entry level or?
Yeah, so I'm actually an entrepreneur. So I am working full time on my blog and on my Twitter account. But I think this is a fantastic segue to kind of talk about, how the COVID-19 pandemic really impacted a lot of people. And honestly, I found a statistic that shows that 49% of Americans under 35 reported having a side hustle after COVID-19. Just like that's how much the COVID-19 pandemic impacted our entire society. And this is just for America. I'm sure others, outside of America also figured out that, relying on one single income, from a 9 to 5 job, chances are it's not going to help you if we go through another pandemic, because you could be fired. But building those extra additional income sources, like building up a Twitter account that makes money, or flipping products, or what have you, this is how you make a sustainable income source, even if you are let go or fired or whatever from your main job. So yeah, definitely important to build additional sources of income.
Yes, I completely agree. But I also think that people sometimes do not find the right time to quit their job when to go on their side hustle full time. Because I've seen many people, they quit their jobs and they go all in on a side hustle without experience and without knowing the ins and outs. And then after 6 months, they quit because they've run out of money, and then they need to go back to a job in order to make a living. So like, what was the point for you where you decided that, okay, I'm quitting my job and I'm going full time on my side hustle?
Yes, and that's actually a very good point. So I'm going to share a story of how not to do it. This is one of the mentees I coach. Unfortunately, I met him after all of this happened. But here's what happened. So I think he was like in his late 20s, and he was earning well into the six figures. He had a fantastic career in real estate. But he absolutely hated his job, hated it, 9 to 5, just absolutely hated it. So he ended up quitting his job just point blank without doing any research. He just quit his job, his stable income. It was fairly stable. And he started a side hustle in marketing. Now, obviously, marketing and real estate, they might have some things in common, but for him, they were fairly different. Now, he quit his job, didn't do the research, didn't shadow marketing professionals, didn't do any of that sort. So like you just said, he basically just started, and that's it. After about, I think it was 10 to 12 months, so almost a year in this new job that he was building, and this new company he was building, he did find some success, but he wasn't breaking even. So he was actually losing a lot of money. And actually, it came to the point where he had to sell his house. He burned through all of his investments. He burned through his emergency savings fund. And he was basically, he was scrapping together cash. He could not afford to live anymore the lifestyle that he was living, which wasn't large, given the very little income. So he had to abandon his job that he built, his company, and he had to go back into real estate, a job that he doesn't like. And unfortunately, he decided to, kind of throw away that side hustle that he was building, although it was a good idea. So that's a way not to do it. The way to do it is to take time. Number one, if you find a passion, right? For me, it was blogging. I love writing, I love finance, and I decided to pair the two together. It works perfectly. It works very well for me. And I don't mind working long hours because I love what I do. So find your passion first. I think that's the most important thing. Find what you love to do. Because if you find what you love to do, then it's not going to matter to you how long and how many hours you work. Because trust me, if you build a business, it's going to take a lot of time and a lot of work. Once you have that passion, once you find that, the next thing is to research. What does it actually take to build a successful business in X? For me, it was in blogging. So I poured in hours and hours of research. I actually called fellow bloggers. I got to know their daily schedules. I tried to shadow a few bloggers on FaceTime, right, or Zoom, and trying to figure out, like, what do they do to be successful in their industry? And I was able to kind of peek behind the curtains. When I figured out that this is still the right step for me, the next step was basically building a blog, right? Pouring in money, time, energy, effort, that type of stuff, and building a platform. And once the income was roughly equaling what I was earning in my full-time job, I knew it was time to quit. And that's kind of how I made that transition. And again, like, you don't want to make the transition point blank, like out of the blue, without doing your research, without building your audience, your website, your product. You want to make sure you test it out first and then do the switch.
Yes, I completely agree with this approach, and I had like a discussion last week with Success Theory. I think you know him, and
Yes.
we were talking about this. Like, many people, like, when it's the time to transition your 9 to 5 and go all in on your side hustle, and like you said, you need to find your passion. But I think, and also another important point is, like, you need to find what you are good at and what the market pays, because sometimes your passion may not pay very well, or maybe you have a passion about something but you don't have the talent or the knowledge or the skills. So I think you need to find like the sweet spot of what you like doing, what you are good at, and what the market pays. Because, like, for example, I think the financial space of blogging can be profitable, but for example, if your niche was like, I don't know, maybe I'll just mention something else, like gardening, or I'm giving an example, it might be not that profitable. So it wouldn't be that easy for you to transition. That's why I think you need to do a lot of research beforehand.
Absolutely. The research is absolutely critical. I mean, it's so tough nowadays too to truly, build up the income, and a lot of people want to do it fast too, right? And unfortunately, at least in blogging, right, from my experience, it doesn't happen overnight. It takes a lot of time. And that's why it is important. Like you said, definitely you want to make sure that the price is, you can obviously get paid. Like, if you have a passion for sleeping, or something like that, you're probably not going to get paid for it. But yes, you have to have a passion. You also have to obviously research the market price. And that's where all that research comes in. That means reaching out to local industry experts and, figuring out if this is actually the thing that you want to do, and then kind of moving on from there.
Yes, I agree. Because, like, another point is that I think with social media, many people see only the successes of others. So maybe you follow an account on Twitter and you see that within 6 months they had a successful ebook or a successful blog or something, but you haven't seen maybe all their previous failures. That's what I discussed like last time with success theory, because like many people will try drop shipping, they will try flipping on eBay, they will try Amazon, they will try Shopify stores, they will try different things, and they may fail, and then you see their one success that was the result of accumulating all these failures and all this knowledge and all this experience, and then you see that success in 6 months and you think that, oh, it should be that easy. And when you don't have the same success in 6 months, you are disappointed.
Yeah, that's a very good point, actually. And I'm glad you brought that up. Failure is, a lot of people, I think, shy away from failure, at least where I was taught in school. Failure was always taught as a very bad thing. It was negative, it was kind of associated with something negative. But I think, you bring up a fantastic point. You need failure in life in order to grow and learn and, figure out your passion and your path. And even in your business, like, chances are you're not going to build a successful business from day one. There are plenty of failures that will come along. And it's really up to you, right? The business owner, the entrepreneur, to number one, learn from the failure, and number two, not give up after one or two or even 20 failures. And I think that there are so many great quotes out there, right? With basketball stars or soccer stars or football stars, whoever. And they say, if they took thousands and thousands of shots and they failed, and it really, what matters is just that one more shot, getting up that one more time. And that is the success. And ultimately, that's what people remember you for. It's that success.
Yeah, that's exactly right. But I think like social media doesn't help with that, because like many people are kind of addicted in this instant satisfaction and gratification, and
Yes.
they see people posting about their earnings and they're getting jealous and they're getting anxious that, oh, I'm not good enough. and they're always trying to compare themselves with someone who's like way ahead of them. But actually, you should compare yourself to who you were like 3 months ago, or 6 months ago, or 1 year ago.
Exactly. Yes. The person you want to compare yourself is you. Because we probably don't know the outside factors that come into play with other people. Like you said, how long have they been already active? Maybe they have industry experience in what they're doing or what have you. We don't know the outside situation. So, the only person we can really compare ourselves is the person in the mirror. So, us.
Yeah, and because most likely most of the people, they don't show their failures. They might show you only like the picture that they want you to see, the successful image. That's
Absolutely
why I think
right.
it's important to just focus on yourself.
That's right.
So like what's your like next steps in terms of your personal business? Like you said, your blog, you went full time on your blog and your Twitter account. Do you have like plans to go on other platforms or expand your current platform?
Yeah, so right now I just actually released my first book, How to Get Rich from Nothing. So this is the first kind of, product that I'm uh, releasing to the audiences. And I should probably rephrase that. It's not even a book, it's more like a program. It's a 14-week program. So um, that's something that I was taking as a next step. And I think at this point, now that I have, the blog, I have Twitter and this new program as a product. I think it's still going to be continuing working on the blog, refining some of, the blog posts there, trying to expand in that space. And then potentially dabbling on other platforms like YouTube. So this is probably going to be a project in 2022. I still need to do my research and make sure I can optimize my content for that platform. But it's definitely in the pipeline.
For YouTube, you should definitely check your friend Andy.
Yes.
Yeah, he has like a great channel. And he gives like great tips on how to start a YouTube account. I think he's kind of an expert on that because he's built different YouTube accounts. And also, congratulations on the book. I hope it goes very well.
Thank you.
So, like, if you want, like, you can explain a bit about what this 14-week program is, like, for those that haven't gotten it yet.
Yeah, I'd love to. So, this 14-week program, it's called How to Get Rich from Nothing. If you guys go to my Twitter profile page, you'll see it there. It's right pinned to the top. It's basically a program to help people get rich. But again, the word rich doesn't necessarily just refer to money. By getting rich, I'm trying to embrace a couple of things. So, for example, getting rich mentally, so being able to improve your mentality today from where you were yesterday. Trying to find your purpose in life. And that's actually how the book starts out, trying to find your purpose. When you find your purpose, I think your purpose really ends up driving a lot of the decisions you make and helps you be successful. So that's kind of the first part of the book, but it goes into how to embrace failure, conquering fear, kind of building the life that you want. And the book, so it's divided into a 14-week set, and every week, so 1 week is equal to one chapter. Every week ends on a challenge, and every challenge kind of walks the reader through a couple of steps that they can take to be better tomorrow than they were today. And that's, by the end of the book, hopefully, the 14-week program was able to help them improve in their not only financial life but also their mindset and their personal life. So basically trying to combine those three components into overall a better lifestyle.
Yeah, that's great. But I'm also assuming that when you mean rich, it doesn't necessarily mean millionaire, because we have this misconception on social media that you need to have like millions to be financially independent and live your dream life. But I
That
think it's been proven that you need like much less if you have like a frugal lifestyle and you have multiple income sources passively paying you every month.
That's right. So rich does not just mean money. And it can be completely subjective, right? I mean, what rich means to me might be something totally different to you or to someone else in the audience here. So absolutely, being rich, how to get rich from nothing, the title is really just supposed to refer to how to live a better life. And again, not just monetarily, because someone might not need a lot of money to live, but they're still happy. Others might need, different lifestyle to fulfill their needs and be happy.
Yes, and that's why, like as you said, you need to find your purpose first. Like, what's your end goal? Like, so you can determine how much money you need in order to fulfill those goals and live your ideal life.
Exactly.
And also, like, from these 14 weeks, what do you think is the most important, let's say, change that someone needs to make?
I think it ultimately starts with your mind. Whether or not you want to be successful in life, it truly is a reflection of yourself, right? And there's a chapter within the book, in addition to purpose, there's a chapter there that goes over mindset and mentality. And it really goes over the two main types of mindset there are. And these were actually found by a Stanford professor. Her name is Dr. Carol Dweck, and she did a lot of research and created this fantastic book about mindset. And it talks about the growth mindset and the fixed mindset. And it's funny, when I first read her book, I found out I actually had traits of both the fixed mindset and the growth mindset. And I wanted to figure out, how do I actually change that? So I moved from a fixed mindset, which is, a mindset that isn't exactly good to be successful. So I wanted to move from fixed to growth, which enables someone to be more successful. And I was able to accomplish that by reading her book, by following a couple of steps. And I basically condense all of that information in my personal experience as well into one chapter in my book, in How to Get Rich from Nothing. So I think that's really probably one of the most important chapters there are, just mindset, because everything starts from yourself.
Yeah, I completely agree on that because, like, from my personal experience, like I had the fixed mindset. I used to have that, I studied something specific and I will have to follow this profession until I'm 65. But then once I realized that, I can utilize those skills and maybe switch to another profession that's more lucrative and can pay better and has better career prospects, something that wasn't even in my mind a few years back. So I think once you change your mindset, it kind of, like I think we mentioned at the beginning, it kind of changes your perspective about everything. It opens like a new world to you, even from
Uh,
the very basic things like budgeting, investing, compound interest, dollar cost average. These are like basic things, but once you're not aware of them because you have a fixed mindset, once you change your mindset and become aware of these things and you understand them, it's kind of, you cannot go back to where you were.
exactly. When you change your mindset, you literally change your life.
Yeah, that's right. So let me see. I think I've asked all the questions I wanted to ask, but let me see if I got any messages from anyone who wanted to ask a question. Let me check quickly.
Yeah, I can hear you both. Hello, guys. So I'm new to Twitter and I would like to maybe make some money off Twitter by selling, I think, a course because I'm very good at sports betting. I've done it for, I think, around 5 years now, and I would like to make it on Twitter. So, any advice for me?
Yes, definitely. I mean, number one, congratulations for, going ahead and getting ready to follow that entrepreneurial spirit. I think that's fantastic. At least from my side, and I'll throw it over to Costas afterward. I think one of the great ways to start is using a platform called Gumroad. And I'm sure you've seen this before. That's what I personally am familiar with, which is why I'm saying this. And they basically allow you to create a course, a book, whatever it is. You can develop it there, edit it, whatnot, and then actually sell it. And it's a decent platform. The fees aren't too high either. So this, for me at least, that's worked well. I would just say make sure that you build up, obviously, a good relationship with your audience. But what about you, Costas?
Yes, I think the thing you mentioned at the end, you need to build an audience, establish your presence on social media, provide value with your posts, try to network with people in your space, and then try to launch whatever product you have in mind. Maybe it's gonna be a subscription service. You mentioned, I think, sports betting, so maybe you can have a subscription service about a group talking about sports and betting and whatever it is. But I think the number one step is to focus on growing and creating value, and then on what you're going to sell.
Yeah, thank you very much. I appreciate.
Yeah, thank you for joining. Let's see, do we have anyone else? No. Okay, I think we covered everything. I'm not sure, Fiona, if you want to mention anything else, like was something that I missed or you wanted to mention.
No, I wanted to say thank you for having me on your spaces. I really appreciate the opportunity, and hopefully everyone out there, thank you for listening in. And again, if you guys are interested in finding my latest program that I released, it's on my Twitter homepage. You can certainly find it there. It's called How to Get Rich from Nothing. And I just wanted to say thank you again.
Yes, thanks for accepting my invitation, and thank you to everyone for joining to listen. I hope you got great value from this discussion. I definitely did. So I hope you got some value or you learned something. And yeah, I will probably do another one next week, and I will keep you posted. Thanks again, everyone, for joining, and thank you, Fiona, for being with us here tonight.
Thank you.
Thank you. Bye-bye.
Bye-bye.